still sitting here, waiting for you to come on home and turn me on. Turn me on. Like the desert, waiting for the rain. 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 Like the desert, waiting. All right, what up, everyone? Welcome back to Financial Education and Business. All right, so. All right, what up, everyone? Welcome there back to Financial Education and Business. All right, so. Cool. That was crazy. I can hear myself twice. All right, what up, everyone? Welcome back to Financial Education and Business. I am just going to be covering what happened this week, what we can look forward to coming up, and just a highlight of who reported their earnings. Obviously, on the 30th, we've seen really good numbers from all the companies so far. There is like barely anybody, anyone really didn't perform well at all. So we see that on the 30th, obviously you got Eli Lilly and the MasterCard, S&P Global, Altria. Obviously, Altria probably, reported really good earnings. Let me... So let's look at Friday, because that was pretty good earnings there. So Friday, Thursday, Friday, not Friday, meant Thursday. So Thursday was pretty good here. We got Eli Lilly in the morning, S&P Global, Crocs. The fact that a company like Crocs is making almost $1 billion is crazy every single quarter. And then obviously Hershey's also reported. Let's go right on to the after hour. Let's go into the after hours. The after hour numbers were pretty good. We had some of the largest companies report here. So on Thursday, we have pretty amazing companies here. So as you can see, we had, can I just make this a single day, just the 29th? Nope. Mm, 30th. All right, it's gonna break it down like this. That's fine. I think this is a little too zoomed out. Maybe this is better. How about this? List view. So this is for so we obviously want to see this week on the 30th. All right. So October 30th. All right, so here we go. Earnings week was pretty intense. So a lot, as you can see, what are we overall seeing is a lot of these companies are reporting their numbers, and the numbers have been pretty impressive. Um, we're seeing almost beat across the board. Barely any, there are barely almost any company that's really missing, especially the ones that matter. So that means when we're looking at a company like, um, I mean, Eli Lilly, they're in the drug industry, MasterCard, showing that, people are using their card. Roblox did well. Roblox was getting beat up, and it still is. They allow kids to bet on the market. Oil and gas, not bad, not so good on revenue. As I think a lot of the new innovation is around a lot of the new innovation is on the a lot of SMR, and so maybe money's going to that kind of product. Um, and then you got Hershey's doing pretty well here, revenue of $3.18 billion. I find it quite crazy that you got a company like Hershey's making over $1 billion. That's insane amount of Hershey's being sold. I think the after hours is probably um, the most impressive number here. So we have Apple that reported revenue of 102 billion, EPS of um, EPS of 1.85. As you can see, Apple most of the time they beat their earnings, so it's not uncommon for them to beat earnings. They did well overall, but the market still beat them up. I think obviously Apple is really innovative. They are coming out with a lot of these VR products that I think gonna impact the world in a major way. Um, it just seems like they're a sleeping giant, with a lot of money, who are buying back their stock. Um, and they seem to have just slowed down innovation. Sometimes when companies are making money, they kind of say, why do we want to disturb the ecosystem? I mean, I get it. They probably don't want to disturb the ecosystem. Um, if they're making money and how they do it makes sense, they really don't want to disturb anything. And then obviously, any new innovations or tech has to roll out kind of slowly. I have a feeling that Apple does have something in the back pocket, just ready to show the world that they are innovating. But obviously, they can't just show that to everyone. The Apple's 5-year performance 148%, 1 year is 21, year to date 7%, not so good compared to all the other tech companies that are performing significantly better. Um, Past 6 months, Apple up 36%, and then for about 5% the past month, 2% on the week, and then obviously they dumped after earnings here, sitting at $270 a share. Um, but up, yeah, so that's Apple. Amazon had a great earning here. They beat top and bottom line. As you can see, historical trends indicate Apple is the kind of company that doesn't miss. They have reported earnings since 20. They haven't missed since Q1 of 2023. They consistently beat on guidance. So estimates. There were revenue estimates 177 billion. They beat that by 1.25%. EPS, they beat that by 24%. Strong revenue growth for Amazon, reported 180 billion, 12% increase. Amazon Web Services, Amazon Web Services experienced significant growth. They said recently, and they haven't seen the demand for that service for over like 20 years or so. with a 20.2 year-over-year increase, marking its largest growth rate in 11 quarters. The backlog reached 200 billion, showcasing strong future momentum. So it seems like there's something going on here. Amazon is seeing this kind of just change in the way the company operates. So let's see, Amazon search make Jeffrey richest richer. Let's talk boom 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 boom. During the earning call, something interesting that they said was that they have never seen demand like this for a while, in a very long time. Demand for Amazon's products, their specifically the Amazon Web Services products. So as we know, Amazon has just a ton of businesses, and not only that, but they are also a huge tech company that most people don't even realize. Let's just make take some time and just research a little bit about Amazon's robotics business. So Amazon robotics business. Um, let's see what's going on here. Taking 1,000 years. So they recently actually Amazon employee robots. So they recently are planning to lay off a lot of people, which is pretty crazy. So Amazon launches a new AI foundation model to power its robotics fleet, deploys its 1 million robot. So when you see a warehouse like this, and you think Amazon is just a company that all they do is ship your product to your house, but then you don't realize they have all these warehouses um, that are operated autonomously by these robots, and the fact that they can, fire 30,000 employees for the year and just have these robots that cost what, let's say 50,000, and what's the ROI on these robots that are given one specific job, no questions asked. That's exactly what they do. And obviously imagine the repairs on these robots. But I think Amazon is more than just deliver my goods to my house. Even in that route, they own A to Z of that process. So if you buy something on Amazon, they will take it from the warehouse using these robots, deliver it to your house using a not autonomous, but using Amazon cars. So Amazon owns the entire infrastructure, so they don't have to partner with anybody. So obviously Amazon has partnered up with a company called Zoox, I believe, and to start doing autonomous deliveries. So Amazon Zoox part taxis. So here is, I believe this is more like it's not a taxi. I thought it was a um, it was a delivery vehicle, but it drives by itself. But even if it was just some kind of like, or maybe okay, so it is autonomous driving. They have these cars, I guess, buses that they can deliver people from A to Z. How hard do you think it is for Amazon to deliver people's products? Um, they're gonna get all this training data and just plug it into a car that is specifically made to only deliver. So the fact that they have this partnership, I think no, actually they ended up buying the whole company, um, and so which is pretty impressive. So Amazon really owns just a large part of everything that they do, and they don't really have to depend on anybody at all. So for some reason, most people do think that Amazon is straight up a straight up a just shopping site, but they're a lot more than that. And these are the kind of robots that they use to deliver uh, your items in the warehouse. So when you're seeing, whoa, this is not the US, AMZN, when you're seeing that Amazon is, um, the stock actually just exploded to the upside on their earnings. So they were what? They were $222. Looks like they bottomed there and they just exploded about, I think it was about 13%. But now they're just kind of seeing this top and probably trying to consolidate. But when you look at the forecast of what analysts are saying there's still a good, 14.6% upside from here. So that's pretty impressive. And when you look at these numbers, I was looking at this and it was kind of wild. But no analyst here out of the 22 to 23 analysts, 47 analysts, sorry, no one is saying sell this. Like even with the recent run on the stock that to like $13, I mean about 13%, no analyst here is saying you should sell the stock. If anything, the strong buy maybe dropped by one, but buy still went up by two. So probably somebody dropped from strong buy to a buy. But overall, the company just seems like it's ready for some kind of news that's going to come out. Um, Obviously, they just reported, I think they laid off 30,000 employees, which just kind of tells you, like, hey, hint, hint, market, we don't need all the expense that we have. We don't need everybody that is currently working in the warehomes. Obviously, this is sad because Amazon is not the only company. I think Amazon is one. Intel, I think Intel, Target is, I think, getting rid of at least 25,000 people. And for Target is not the employees that work at the shops, but it's the blue collar, is the office workers. Um, but no, I think Amazon is more than just it's more than just a shopping site. It's a robotics site. It is an AI company, and then you have the Amazon Web Services that has about, I think, over like 3 million apps. When Amazon Web Services went down, there were so many products, so many apps and businesses that were impacted. And during their earnings call, Amazon, uh, the CEO said, "We have never seen a demand like this for 20 years for Amazon Web Services products." And I was looking at that number the other day. Um, that side of the business grew significantly. I'll have to find it another time. Let me see if it's here. It was pretty impressive amount of growth that they are seeing. AMZN, Amazon. I think the I'm looking for the Amazon chart that shows that breaks down their earnings based on their segments. So Amazon Q3 2025. So this is a good chart of how Amazon makes their money. Let me make it just a little bigger so we can all see this. Let me zoom in a little bit. So you have Amazon online shopping year over year up 10%. You have your third party services, which is up 13%. Yeah, Amazon Web Services, which as everything is going to the cloud, um, Amazon is going to be a big shareholder of that. So a lot of investors are looking for this number to actually become a large part of their revenue. You can see this on Google's earnings. Google's earnings showed that their cloud business is actually growing a lot faster. Um, and obviously they got their advertisement and search business that's huge. But so you're seeing Amazon here, their Amazon Web Services online cloud product growing here at 20%. and that's what $33 billion, just this year over year. And then sub services, so subscription services, 12.6 billion. And I think this is going to be the next leg of their business. Like as they continue to automate their warehouses, they own the autonomy of delivery from the warehouse to your home. I think that that's going to allow them to have better margins on their products. They don't have to hire as many employees, and then they don't have to have employees delivering those products to people's homes. So that means their margin is going to be even way better. So the subscription based business is going to be amazing. Amazon is huge. Obviously, they own Twitch, and so there's a lot of ads that that go there. And Twitch is a growing business. They obviously spent a lot of money on the business, but it's still growing. People are tuning in on what's going on YouTube, Twitch, and video services. And so their ad service there is going to grow, and then as well as when a lot of people sell their products on the Amazon site itself. And so what that does is you have people that sell their products on there, but then they pay for ads for the products to appear at the top of the search results, which that gives them even more and more revenue. And during the drop shipping business, their ad revenue was just growing significantly. And I think as time goes on, as Amazon becomes more of an efficient company, this is going to continue to grow. So as you can see, 24% year over year growth here for this business. And then they got the physical stores. Um, I forgot what their name is. Maybe one of you can tell me if you remember. But there's a physical store here, like close to my house, and Amazon. And I see a lot of people going into that store and shopping for different types of products. And it's actually considered healthy. It's like Trader Joe's. I don't know if you heard of Trader Joe's. Their physical store where you can shop for groceries, and then I think if you have their Amazon Prime membership, I believe you get discounts on some of the stuff that you buy there. And like everybody else, any large institution, they have their other bets up 8%, making about 1.4 billion in total year over year. This company's up what 13%. They made about $180 billion going in. Out of the total, looks like 17% year over year in the gross profit margin. So that's about $91.5 billion that they made this, and then that's a 17% increase year over year. The rest obviously is going to the cost, but with their autonomous business, with their autonomous business of like the warehouses and delivery, and then obviously sports as well. They have Amazon, the Amazon Prime videos and music, and especially the World Cup that's coming up. Amazon is going to be growing even way more. So with the World Cup, you're going to be able to watch movies through your Amazon subscriptions. And imagine the number of ads that Amazon is going to see during that time. And their ad revenue is going to just skyrocket. And then, even then, there's going to be a lot of people buying products off of Amazon just for the World Cup event itself. And so, pretty impressive there. So I see major growth for Amazon in the coming years, just because they have the money to invest for that growth. So gross profit, operating expense is looks like it's about 74.1 billion. That is up about 22% for the year, and then operating income about 17.4. So you see this huge expense here. They got the fulfillment. That's about 12% increase for the year. So that's delivering your items, your goods from the warehouse and everything. But then when they start automating this business, a lot of these billions of dollars are going to go straight to the company's top line, because that's reducing all this fulfillment expense. Tech and tech infrastructure, they're a tech company. It looks like they're investing a lot more in their into that business. So it looks like there's a 31% increase in the tech expense. That's a $29 billion. And then you got the S&M at about 10% year-over-year growth at $11.7 billion. G&A, general administration expenses, 2.9, about $3 billion there. And then they have their other expenses. Whatever this is went up 833%. Who knows what this is? This could be related to like their other bets that they're paying, they're developing, like technology and so on. So that could be that could be what's going on there. Then we get into the operating income. This company paid taxes, 6.9 billion, and then they had a net income of about 101% year over year. That's huge. And then they had there's about a $10.7 billion year over year. That's about 1,700%. And whatever this other item is, which that brought the net income to about $21.2 billion. If we look at their financials historically, this is a company that continues to grow. So in 22, even during the whole like COVID situation, Amazon still grew year over year. So they grew at 37 to almost 38%. 21, they grew at 21. There was a slowdown here, and then they picked up steam, and it looks like they're slowly kind of like around this, what would you say, like 10% annualized growth. And I think as we see that there's more and more efficiency, the company is going to be able to make more and more money, less on this cost of revenue, and then we're going to see better gross profits. Year over year, since 2020, the company hasn't stopped making positive growth, gross profit. Dang. And so that's still pretty impressive. They're selling general administration expenses. This has continued to grow. It looks like in trailing 12 month, it's 163 billion. And then these 2023, 2024, it was more of like and it still grew some there, as you can see. 2024 went 270 to 130, $311 billion. Research and development, that makes sense. I thought this would be a lot more. Selling general, I think this is where the cut is going to happen. As we see the company become more and more efficient, right here is where we're going to see a lot of the efficiency gains, and then and there's going to be a lot less of the general selling and general administration expenses. They can automate and make their warehouses a lot more efficient. So we ended up with operating expense looks like 130, 170, 233, 240. The operating expense has continued to grow, and this is where the company is getting hit. And that's what we saw on the chart, that about operating expense is about 22% of their 22% of their gross profit. Operating income, 22, 24, 13, it did get hit here, but also we can see that revenue didn't year over year kind of slow down a little bit. From a balance sheet perspective, let's just see how healthy the company is. So the company's health. So let's just look at their short-term to current assets and look at that and compare that to their current liabilities. So 132 billion in assets, 126 in liability. So assets versus liabilities looks decently good. They have more assets. I'm not going to say way more, but when it comes to the current asset, they have more current assets versus liabilities, which is pretty good signal that the company is about par, not overly leveraged in one way or the other. Total assets. Total assets looks like they got $321 billion in total assets. Liabilities, 227, about 28 billion. So from a asset to long-term asset to long-term liability perspective, the company's healthy. If they wanted to raise money to do whatever kind of venture, they can do that because Amazon barely has, well, not barely, but they have way more long-term assets versus liabilities. Um, and then let's see how it looks like from the net income here. Not net income, total liability and equity. That is definitely growing there. Total debt 104, 13, 160, 160. So we're seeing some stability here in total debt. Um, net cash minus debt. So here, this number says that net cash is an indicator of the financial position of the company. It is calculated by taking the total amount of cash and cash equivalent, subtracting the total debt. A positive number indicates the more cash than debt. A negative indicated more liabilities. So here, as you can see, we're seeing a negative 20. So they had more debt here, more debt, more debt, more debt, more debt. Overall, um, from a net cash perspective, the companies is starting to get towards more and more positive net cash flow. Um, but most likely, what they're doing is they are investing into the company and their operations. So operating cash flow 600. Now you're seeing the significant growth here. Decline here in 2021. The whole, probably they're getting out of the whole pandemic situation. 23 81% and 24 36% operating cash flow. Investment cash flow, there's money out here. The company did use that money to invest. So investment cash flow is the total change in cash from buying and selling investments and long-term assets. So as you can see, they did use money for long-term investments. Financing cash flow, about $1 billion here. They brought in some money these 2 years. It looks like these 2 other years they financed even more. So we're slowly getting to the positive, but it's not always a bad sign that a company is financing certain things. So financing cash flow is the total change in cash through financing activities. This includes dividend payments, share issuance and repurchase, changes in debt level, and other. So this is not a bad sign at all. Most likely paying down some debt, or maybe like related to buying more stocks and so on. Here, as you can see, total debt issued. They had this added this back, so it looks like they kind of slowed down on total debt issuing. So free cash flow, 25 billion, negative 14, negative 16, and then they're back in the positive year over year, about 2% growth. So far, trailing 12 month, it doesn't look like they're going to hit this 32, but we'll see at the end of the year. From a quarter over quarter perspective, might have been like a better view of the company's short term performance. So you're seeing income, revenue, just kind of seeing that stability around that 10 like we saw. We're seeing the net income growth in the about 50 to 60% here. So net income to common shareholders is growing significantly from a quarter over quarter perspective. So I think Amazon, with a market cap of what, 2.61 trillion, 261 trillion, and then we got Google, it's got 261, and then Google at 3.4. Maybe there's some room for Amazon to catch up there, as Amazon does, delivery. And when it comes to like food and purchasing products, there's a lot more people buying products from that site. So we're seeing this is Amazon's number going to September 2020. So we're seeing their online store revenue growing. I mean, we see it at 177. Now in September, it's sitting at 260 billion. That's a pretty impressive growth over the course of 5 years. And I have a feeling this business is only going to become more efficient, and so it's good. It's good to see that their physical store, it grew, but it's slowly growing. It's probably, it's not their bread and butter. It's probably not something they're focused on, anyways. Their third party seller service revenue, this number is starting to see some decline. I'm not decline, but like stagnation. Not really growing that fast. Um, but however, still growing regardless. The Amazon advertising services and revenue. I think this is where Amazon is going to see the next growth curve. So we see this ad revenue really kind of hit here in $26 billion, but as you can see, there's some like stability, not really growing, and I think we're going to see this business pick up even faster and faster as we become more of like a digital economy. We're going to see way more ads and everything else. I think that's going to be subscription, and then subscription also, not their biggest business, but it's going to be, I believe, a core business later on. um, Amazon Web Services is becoming a giant there as well, seeing a total change of about 186% from here to here. So yeah, I mean, Amazon obviously had that run, after they reported, but I don't think it's gonna be over at all. Um, so that was really good earnings, I thought, from Amazon, and I don't think we have seen the company at full scale yet. Um, Next, let's get into so the 30th, we got into Amazon, Coinbase. Their earnings were honestly pretty good. So obviously they missed Q2 at 2025 here, on EPS. Um, but this quarter they did beat EPS by 32% and revenue by about 5% here. The market did reward them at 4.62 there on Friday, but their numbers are pretty good. This is a company in the, obviously in the cryptocurrency market, and they I think they are they have partnered up with, the American government and large institutions, and I think they're going to be a core company. A lot of these larger institutions that already exist are not going to be able to are not able to provide the same service, and so they have to rely on the technology that they don't understand. So they have to rely on companies that operate in that industry. So this is why I kind of think that, there's a chance that there's probably some chance that Amazon, that Coinbase is going to be like one of the main companies out there that and like Brian Armstrong, the CEO, is pretty amazing. Pretty amazing. He's been part of the company for so long. Just comparing, I don't know if this is even a fair comparison, but I mean, this is more crypto native company, started as crypto. They don't offer stocks, but they can easily do that. They're probably driving for some kind of like tokenized asset trading. You got Robinhood from a revenue perspective. They're both pretty close here. It looks like Coinbase revenue has been coming down in 2023, but then overall, they're starting to kind of, get in this even revenue growth perspective. Dilution, there's a lot more dilution going on, it seems like, from Coinbase. Adjusted EBITDA, Coinbase and Robinhood are pretty close. Um, the stock price, well, Robinhood is up significantly. Recently is 202%, and then obviously they're a smaller company. The market cap size are not comparable, But overall, as you can see, there is, from a valuation perspective, Robinhood is trading at a little bit more. It looks like price to free cash flow, forward looking, 2025 here and now, May 2025 and now. So valuation is definitely shows that, from price to cash flow, that Robinhood is 48x, and then Coinbase is 41x. Balance sheet debt to equity ratio looks like Robinhood does have a better debt to equity. Margins looks like they're both eking out. Gross margin looks like Robinhood has less expenses maybe, and less cost of revenue, and so they're hitting those numbers, or maybe even higher revenue. And then we're seeing return on equity, ROE. It looks like Robinhood has better return on equity there, return on their investment. Um, Coinbase targets 2 billion BVNK deal for fresh stablecoin. Yeah, so this is what I'm talking about. Overall, just Robinhood is not Robinhood. Coinbase is the main company when it comes to the entire digital currency infrastructure. They are just gonna win that. There are other companies like Kraken, um, but that's kind of hard to tell still. Like, no one really knows if Kraken can actually compete. I think um, you can buy tokenized stocks on Kraken already, and so Kraken, they do plan to go public soon, but they're still a private company overall. So yeah, that's what I wanted to cover on Coinbase. This is a company that has potential growth in the long term. Coinbase, I don't know. I mean, obviously, this is another crypto company. Am I a fan? No, not really. And so, MSTR is an alright company. A lot of people, like MSTR. Um, I think they've had their run already. They're understanding, their financials can be, it's not as fair, because you can't really say EPS on revenue. You have to compare their MNAV, to see where their crypto versus stock price valuation is, rather than looking at maybe their earnings per share kind of metrics. So the company reported significant improvement in their financial metrics, including 3.9 billion in operating income and 2.8 billion in net income. Net income Q3 2025. Company like this that is growing quite significantly and hitting about 122 billion dollars in revenue. They they don't really have a large team. It doesn't take that much. There's a lot of efficiency. They don't really first, they don't have a large team, and second, they don't have to pay um, they don't have to go through the headache of like the whole having to have a large corporation, being a part, having offices in a whole bunch of locations. You can technically have everybody virtually. um, as you can see in the past, their estimates have been, they don't always hit those numbers. That's because the valuation for the company is not can't be done in the same way, and there needs to be a better valuation metric for these companies outside of EPS and stuff like that. um, Reddit, I think Reddit is such a good company. I would love to own some Reddit. um, I'm just not in the situation. I don't know what to sell to buy Reddit, but Reddit is such a good company in the long term. From when we look at the analyst forecast, they're saying they're still a 4% from here. This is a company that is covered by 25 analysts overall, kind of saying this company is a buy. Barely anybody saying it's a strong sell, but overall they're saying that it's a buy. So Analyst ratings. So here are the ratings: hold, strong buy here from B. Riley Securities, JP Morgan saying it's a hold, Needham saying strong buy, Citigroup, Raymond James, Truist Security, Wells Fargo, JPM Securities, Piper Sandler. A lot of these larger institutions are saying that Reddit is a big buy from a just forecast perspective. There's 25 analysts looking at this company, and they're saying this company is a buy. There's still a good about 5% upside, but the reason I think Reddit is just an amazing company is the depth that people go on the Reddit chats is just out of control. You start researching something and you can go down a rabbit hole with detailed information and really helpful data points. So I do think Reddit is a decent company. If I was looking to sell something, I would that would be where I would go. um, CloudStrike, Cloudflare. Cloudflare is, again, what do they do? They beat EPS by 107. The market didn't really reward them at all, not by much. So, well, never mind, I lied. The market did reward them by about what 14, around 14% when they hit that estimate beat. In a month, the company's up 16, almost 17%. 6 months, 107%. Year to date, 135%. Because Reddit is such an AI play. If Reddit licenses their earnings, if Reddit licenses their data points that they have, because their data is so useful, I think they can make really good monetization. And so then they plug in AI into their products, and then soon you're gonna see maybe even videos. People actually starting to post stuff on Reddit, and Reddit having some kind of like a video channel as well. That is, from a quality perspective, that is as at par as what we see on Twitch or what you see on um, YouTube. I think this company still got a long ways to go. So my bad. For some reason, I went, and I was thinking about Reddit, but the reason this company is up this much is just because data center security. So as we get into the AI world, it's the talk of everything, and AI hits every single company that's out there. Cybersecurity is actually one of the most important things that we can actually discuss, because cybersecurity literally is as important as, if not more important than, any company that's out there. Um, Let me just refresh this. So, cybersecurity companies are so important just because if if you have a whole bunch of stuff, a whole bunch of data, and you can't secure that data, then your data is useless. If, as a country, if you can't defend if you don't build a moat or defend your information, and some other country can hack into it, that is not a good sign at all. So because of that, I am looking into like cybersecurity companies, like Zscaler. I'm looking at CyberArk Software. I'm looking at CISO Global, Fortinet, Sentinel One, uh, Netscope, Okta. So I'm looking at all of these companies, and I'm more interested in the ones that are, I mean, Broadcom. This is a huge company as well, but uh, it's always important to kind of like to look at these companies and just keep track of them. But when the opportunity comes, just to have the money to invest in them. Right now, a lot of them are really expensive because the demand in the industry, and where we're going. So security technology is going to be one of the most important how do you say this, like technology security, AI security, from like foreign attacks is going to be so important, especially at the level of innovation that we're going through right now. And so people have to, countries and businesses have to be able to defend themselves. And it's important, like for even for governments to be able to secure everything that they do, because a lot of the products people are going to start using is based on AI. Maybe, some person makes an AI product, and people, it becomes so popular, people start using it, but they don't realize there's a huge security gap, and that gets hacked by countries. So imagine TikTok was something that was huge, people are downloading like the crazy, but they didn't consider how risky it was, because people, even people in government, were downloading that data. So and the Chinese government was able to take action on that kind of information, and be able to surveil um, people's phone usage, and text messages, friend groups, social media, and then became one of the most valuable companies because of the kind of data they have access to. So data is one of the most important things. So that's why I created this list of so many um, cybersecurity companies, because I really do think this is the next um, almost AI equivalent play in the industry. In the past 180 days, we've seen a lot of companies just skyrocket. But then let's look at the past 30 days and see the performance of some of these companies in the cybersecurity world. Let's see if I can add a filter here, and let's look at past 30-day performance. Um, mm, so yeah, I mean overall, Zscaler has got a good growth here the past 30 days. Calix 12%, 31% here. Copin 29% on Viastat. Um, so this one, Broadcom, is down significantly here. I believe they reported earnings, and those numbers were not good. So let's look at Broadcom. They're down significantly for the past couple of days. Huh? This is a little confusing, actually. How does that make sense? Who? Oh, okay. Oh, because this is a copy paste name. Okay. So this is VA. They're down significantly. Not That's definitely is not Broadcom. Um, a small 2% down on this company here. 40% on very what I say very Verenus. They're down about 40%. I don't know if they maybe reported earnings or something like that, but those numbers do not look good at all. So let's look at why Verenus is down. Oof, jeez. Yep, they reported earnings and they got beat up. Um, Verenus System is a cybersecurity vendor focused on data privacy and security. The firm is currently undergoing a cloud transition as it when as it as it weans its on-premises customer over to its cloud products that are delivered as a software as a service. The New York-based firm was founded in 2005. So they are getting beat up right now. They reported so this company reported their Q3 earnings, and for some reason, um, they beat their EPS by 220%, but top line, they really didn't do as well. So Verenos has successfully transitioned to SaaS model. 76% of the total annual recurring revenue now coming from SaaS, achieved more than 2 years ahead of the schedule. The company reported 18% year-over-year increase in ARR, reaching about 718 million, and continues to see strong demand for their SaaS products. But then they only got destroyed that much because 2.76% miss on revenue. So they went from a $60, wow, they got beat up. Verno Systems stock is moving lower Wednesday. What's going on? So Vernos reported adjusted earnings share of 6 cents, in line with consensus estimates. In addition, the company reported sales of 161 million, missing consensus of 166. Okay, they barely missed it. Annual recurring revenue rose about 18%. Term license subscription revenue dropped 24 million from 68. Whereas GAAP operating loss about 35 million, deeper than the 23 in the same quarter last year. Non-GAAP operating income all but evaporated to 200,000 versus 9.1 million a year ago. Jeez, why did this happen? Non-GAAP operating income all evaporated. Why did this happen? Why did the non-GAAP operating income get destroyed? So non-GAAP operating income fell from 9.1 million last year to about 200,000 this quarter. That's a 97% drop, signaling that the company's core operations generated almost no profit the period. Wow. Core operations didn't even make any money practically. This sharp decline suggests rising costs, shrinking margin, or slowdown in revenue growth, despite headlines. Companies often use non-GAAP metrics to strip out a one-time expense. So term license subscription revenue dropped 68 million to 24 million. That's a 64. So their term license dropped. So that's why maybe this happened. So their maintenance and service revenue fell from 21 to 10. Oof. These declines were largely due to the customers migrating to Verno SaaS as a service, which cannibalized legacy on-prem businesses. Interesting. That's what I was thinking. So in the final weeks of Q3, the company saw unexpectedly low renewal rates, especially in the federal vertical and broader open perm subscription phase. This renewal shortfall directly impacted the revenue and operation income, catching margins off guard. The company is investing heavy investment mode, scaling to cloud as a service, /next for AI email security, and Cyril for database monitoring. Research and development about 17%. So they really got destroyed. So, well, maybe this isn't. Maybe they could be some kind of. This might be some kind of a play, to be honest. From a valuation perspective, right? How is the company priced? And also, so share price about $32, fair value estimate about 65, 50, saying that it's an implied 50% undervalued right now. Market cap about 3.6. I think they were up. That means they were up what, $6-7 billion. So they lost a lot. Enterprise value kind of removes the debt, so they're below the enterprise value. Forward earnings to 2060 extremely high due to the compressed compressed earnings. Priced sales 11. So non-GAAP uh, liquidity and cash, free cash flow 120 last year, 124.8 over the last month. Cash equivalent about a billion. Debt 700. Net cash position 418 million. They did a share buyback authorized at $150 million, signaling management confidence. Well, they cut this in half. They literally spent, just kind of burnt up some money. So SaaS revenue up 118% now to 76 for total ARR. Total ARR, annualized recurring revenue 718. That's an 18% increase. Guidance cut. Full year ARR growth revenue was cut, revised 14-15 due to legacy renewal weakness. Valuation multiple comparison versus the competition in their industry. So how's the company doing versus their competition? So they're at 11 price to sales. We got Sentinel at 8. We got forward PE 265 because of the margin compression. Price to earnings. Their earnings just plummeted. Price to free cash flow. EV to revenue 6 here on S. Sentinel 1. You have EV to revenue, enterprise value. You got 10 here, 13 here. Gross margin 81, 80, 80. Okay. So Varenus elevated PE reflects extremely low earnings due to its SaaS transition, probably lost customers. EV to revenue, price per share are lower than Zscaler and CrowdStrike, suggesting the market is cautious about Varenus execution risk. Gross margins are strong across the board. Sentinel One trades cheapest of EV revenue due to its small scale and recent profitable milestone. Varenus is a transitioning phase. Now 76% of IRR, expected to hit 83 by the year end. Its legacy on-prem business is shrinking fast, dragging down renewal and compression margin. Peers like CrowdStrike, Zscaler are fully SaaS native with broader platforms and stronger retention. So what is this like on-prem business? What is? I think this is the idea that the company, they got, the stock just got destroyed. I mean, this is a company that was $62 a share, now is trading at 30, in the 30s. So I don't know if this is an overreaction. The company is obviously in the middle of a transition. They're working on becoming more of a SaaS company and not too focused on a lot of the physical ways that they do business. So their on-prem business is what's getting messed up for them, and So the business model refers to the software and IT infrastructure that is hosted and managed within the company's own physical facilities. So they're becoming more of a cloud company and getting rid of this physical part of the business, which probably is going to cost them a lot more money. So they're making a good transition, but in the middle of that transition, they lost customers. Customers went to other businesses, probably Amazon Web Services or maybe even Google Cloud. Um, Google Cloud, and you see CrowdStrike, Zscaler, SentinelOne. Their competition probably just took on those customers they lost. But maybe there is an opportunity here that to say this company is transitioning. AI is not going to slow down. Innovation is not going to slow down. So customer, as they become this um, business as a service company or software as a service company, there is potential that there can be a turnaround. Because it doesn't seem like this is going to end the company. They're more, in a way, moving in a more strategic manner to move to kind of create efficiencies within what the company does right now. So I don't know. I don't know. CrowdStrike, a lot of the other AI companies, a lot of the cybersecurity companies reported way better numbers. But yeah, this is my entire list of cybersecurity companies that I'm tracking, because I think cybersecurity is going to be almost just as important as AI, because without cybersecurity, um, AI and everything that gets developed with it is not going to be as uh, trustworthy. Countries are going to have to learn to defend themselves using these types of products, cybersecurity products. So that is why I think I'm looking for a moment where one of these companies gets beat up and I can pick them up for cheap. Um, that's why we were looking this Varenus Systems, and there's potential right here for the company. They got hit by practically 50%, trading at $60, and within 2 seconds they're trading at $30. Um, from strategic perspective, the company isn't saying, you know what, we're going broke. We're all they're saying is we're trying to become more efficient. That's all. And so due to that, the market is really punishing them, because now when they move from one strategy to the next, they have to find the customers that will support that type of business. Um, they may shed existing customers. They may not make as much money because now they have a list of customers that decided, you know what, we need to go to somewhere else, where the products that we used to use at Avernus is provided by another customer. So cloud is obviously going to be something that's going to continue growing, especially in the AI world. You look at Amazon's numbers from cloud services, it's phenomenal. You look at Google's cloud service, phenomenal growth. So we're just starting to see demand in the cloud native or in cloud services. Like they were saying here, like a lot of the competition that Vernus has is already cloud native. So now they're they're stripping their old business and then getting in a bigger pool of competition. They may not get a lot more customers, but I think as an industry that there's going to be a lot more money to go in. Um, who do we have here? Rapid7, they're down about 6%. So I'm looking at these numbers here. These numbers I can change. I can look at the last 90 days, and I can see the performance of the stocks within the last 90 days. I can also track the movement of that stock over the course of the 90 days, and so I can say, you know what, this company A10 Networks did get beat up, 21%. Then I can quickly go do research and say, oh wow, maybe this company is a buy, or wow, okay, they deserve to be down 26%. So if you want this, let me know. I can drop it in the comments. I can share it. Rapid7, they got hit as well here. Um, so Planet Labs, uh, you're seeing, like, when we're looking at the long terms, a lot of these companies, this is about a $9.8 billion market cap company that is getting pretty beat up. So let's just let's just go see. Maybe they reported earnings and their numbers were just terrible. Um, so Cirrus Inc. I did not know Cirrus Inc. has cybersecurity. Let's see, so how do you say that word? Cerion provides informational technology security solutions through its subsidiaries. Um, let's look at what happened here. I mean, I don't think this company is getting beat up. They're doing pretty good for themselves. This is a company that was what, 36 cents? And now they're trading at $4. So at max, I mean, this company, plummeted, looks like in May, um, and from about $3, whatever, $3.35, all May, all of June, July, September, August, they were most of October as well. They were down significantly. Man, this would have been a good pickup here, and they were up max at the max. This company's up at 2%. Going the past year to date, 2%. Past 6 months, this company's up 6x. How do they do on this earning report here? So they reported this Q1 earning 2025. They actually missed on EPS, and so that's probably why the market didn't really do anything. Here they, you know, estimates they hit the revenue of about $4 billion. The market didn't care. Q2 they have about 3.89, about $4 billion. They missed on EPS. Nobody took them seriously, and out of nowhere, here they just exploded. Now they're up 657%, 900% over the past month. Um, and then past week, this company's up over 2,000%. Imagine if you put in $1,000 into this company. That would have been amazing. But it's hard to know, when a company's going to report good numbers, or you just never know what they're going to do. So let's see what they did. So Q2 reporting, this must have been more of a news related information. Um, what happened? So, oh wow, so they hit a couple of circuit breakers here. The stock price was just going up too fast. So let's go on and see what's going on. This is an interesting company. Is there growth or is this hype? Um, I was just looking at Reddit here, but let's see what is going on and what are the analysts saying about this company. Um, wow, there isn't really much analyst coverage. This is a tiny company. I normally would not get into tiny companies because they have a lot to prove, a lot to prove. But this doesn't seem right. Is this even the same company? Because here, when we were looking, this company was up significantly, but here, oh, because this doesn't show the after hours. Well, it does. Because they're not the same company. Yeah, I'm not looking at the same company. Serious Inc. Serious Inc. CYCU. It is the same company. What's going on? I don't know, but so technically the company's down. I don't know why here we're seeing that the company's up um, on the month 900 when I look at the month here. So whatever they're doing is kind of messed up. Um, yeah, something's going on with the charts. I don't know what's going on here. Serious leadership outlines 2025 milestone and highlights operational goals for 2026. Yeah, no, I don't know what's going on. There's something that's messed up here. But from what we saw in in my chart here, this company is down 68% the past 90 days. That matches up with what we see here, and not this earning report. I think probably the data there is kind of messed up. Um, so yeah, there aren't a lot of there isn't much coverage here, but it looks like the cybersecurity, um, using its subsidiaries and the global standard in cybersecurity operations. And sometimes it's like, are these kind of companies even worth getting into? Um, just because you have just because you have a company like Google, I would say I'd rather buy an Amazon, because the company like an Amazon, they have the cloud service, they have cybersecurity, they have retail shopping, they have videos, live. Like they even have Amazon Live, where people would show off, products as a seller to sell to the shoppers. So sometimes it's not even taking this risk. Um, it's not worth taking this type of risk, because you have a company that's proven themselves. So that is, I'm not even I'm not even gonna look at that one. Um, but yeah, they're definitely beat up. We've seen a couple of these companies here. F5, F5 that's beat up. Common Value Vault that's also beat up 25.35%. All right, let's keep going. So all I'm doing in this video is going through earnings. If you want me to look up a company that you are interested in, just go ahead, definitely drop it in the comments. Give me the ticker symbol. I may check it out. And most likely we'll just check it out. If there's a company that you like that you're kind of researching right now, also let me know. So yeah, we were going through and looking at the earnings that were reported on the 30th. So this is what got me going in the cybersecurity route. I think this industry, cybersecurity, is going to be so important in the long term, as AI is becoming just um, global investment. Rocket companies, mortgage, I think they did well. As you can see, a lot of these companies, from a um, an economic perspective, we noticed the largest companies are reporting good numbers. So when we look at social media and the news, oh, there's a lot of repos, a lot of banks are starting to borrow money. There's a lot of there isn't enough liquidity in the market. I think that's all just talking points. The S&P literally hasn't gone anywhere in 1 year. We're right now just getting out of the all-time highs, or even at all-time highs, since the year has started. All we did is we got a large hit in April due to the trade tariff, and then now we're back to where we were before the the whole tariff situation. Have we really gone anywhere the whole year at all? Not really. Um, I think when the only reason is the stock market crashed, a lot of people invested, and then now it's recovered. A lot of people have made money, and it may feel like, oh, I made a lot of money. Maybe the market's too hot. But is it really? The market hasn't gone anywhere for a year, and we've had so much development for the year. So I think all that earning still needs to be capitalized on. Companies are going to start, as we see, companies are impacted actually making money off of their AI products. I mean, this site's probably mostly created with AI, and I'm using it. There's probably subscribers. I haven't subscribed. Most likely will, but like we're seeing a lot of innovation that's coming out using AI. So all that revenue is being generated. Some of the largest companies are becoming more efficient and getting rid of, uh, actually reducing the number of employees that they have because of AI. and they because they gain efficiency, and that's why we're seeing companies actually report positive numbers because there is efficiency at the company. So obviously, there may be some companies that might not do as well, but overall, the most important companies in the world, in the United States, are making money. Revenue's up, their earnings per share is up. Um, Tulio, they report as well. EPS up 60%. Zillow, how's the real estate market going? Not too bad, especially when they report a 57% growth in um, 57% beat on EPS here. They literally just reported this. So all this is just kind of goes to show that the economy is literally just picking up right now, and we're back to where we were for the year. Um, Zillow did report really good numbers. We're seeing rates come down. As rates go down, business financing, small entrepreneurs are going to start taking loans. Mortgage, it's going to start going up, right? Because now mortgage rates are going to go down a little bit more. So we're going to be able to see what's going on in the. We're going to be able to see even more heat up in the economy. Jerome Powell kind of came out and said, "Oh, you know what? Probably, it's not a foregone that in December we're going to drop rates by 25 basis points." But then at the same time, they're going out and doing quantitative easing. Um, they're going out and buying securities. They're buying quantitative easing. Buying. Let's see what this is. Carry all went from Christmas to. What is this? Sorry, Mariah Carey. All I want for Christmas. There we go. Got Christmas starting. But yeah, companies are going out there, um, doing a lot of investments in AI. The government is starting to buy back their mortgage-backed securities. So definitely, there's a lot of stuff going on, and we have a president that doesn't really care about um, like what are, what people think of him, what other countries think. He will just make them pay what they need to pay to do business in the United States. Um, so we're not slowing down. I think there's some people are gonna say, oh, there's this crazy situation, like the government might not lower rates when the time comes in December. Like Jerome Powell came out and said all this, but at the end of the day, he just doesn't want the market to get overheated. We're still flat, almost flat for the year, all of 2025. It's not like we went somewhere at all. And so my thought is there's still much more growth in the economy. We're seeing companies that report earnings are nowhere to losing money. They're, if anything, they're gaining more efficiency, making even more money. Um, and so if the economy was bad or getting bad, we should probably start seeing some red in their earnings. So this is their earnings, the revenue and their EPS for the year. So as long as companies are beating their earnings, and actually this has been across the board. Like if I just zoom up overall, when we see a lot of red mostly, right? And so that's why I don't think we're slowing down at all. And most likely Jerome Powell is going to continue buying mortgage-backed securities. So if I search MBS, hopefully this will bring up the chart that I want to see. MBS, you will see that the federal government is starting to buy back some mortgage-backed securities, and they've spent a lot of money. Overnight repo is going up. Banks need liquidity. Like there's some signs. Oh, the economy is not looking good, but the government is pumping money into the economy. What does that do? Jerome, and then you have a president that's saying, you know what, we need to lower rates even more, and Jerome Powell is going to be out in 6 to 7 months, and in 3 months nobody's going to care what he says, and people are going to start caring about what the new guy's going to say. Um, so Fed. So it is kind of, I think if anything that the economy is more um, doing well, and there's more money actually coming into the economy, which is going to have thousands of ripples. Um, so this guy posts this image here. We're looking at 2005 to up to 2025. As you can see, most of what the government buying back their treasuries, agencies, and mortgage-backed securities, September 30th to October, they bought back almost $21 billion in mortgage-backed securities. They just pumped more money into the economy as of October, as of just yesterday. They bought back 2.9 billion in treasuries, pumping more money in the economy. Liquidity, quantitative easing. Remember what happened during the whole COVID situation or pandemic situation? The government gave a whole bunch of people free money, and what they do, they went out and spent that money. There was boom in the economy, and the money ended up going to the top. It went to Nike. It went to a lot of these retail companies, Amazon. People were just shopping like crazy, and so that's why I think so. This guy right here, he says that somebody posted and said, "Oh no, look, breaking the Fed pumped $29 billion into the banking system yesterday, the highest ever in 5 years. It seemed like Powell hawkish talk were just a bluff." And this guy comes back and says, "No, bro, you got the chart wrong. The Fed did not pump 29 billion into the banking system yesterday. The Fed pumped 50.35 billion into the banking system yesterday. You're only looking at the treasury repos forgoing the mortgage-backed securities. As I've been saying, quantitative easing is coming even though Fed rate is still at 3.75 to 4%. Yet the Fed will not wait for zero rates as they testified before Congress. The Fed will be quantitative easing most likely by the end of 2025. This is that evidence that the federal government, even though they're saying, "Oh, we're not going to reduce rates by December," like don't assume that's going to happen. I think they just don't want to overheat the market. When that happens, stock prices go up, and then other important factors in the economy might get forgotten. But so I think he's just kind of um, just keeping the stock market in notice. Like, hey, guys, chill. Don't assume that we're gonna do that. In reality, it's probably gonna happen um, in December. So I'm totally okay with it. Jerome Powell acts hawkish when Jerome Powell acts hawkish or dovish, but then he really is hawkish. Yes, guys, Bitcoin will save you just like it did in 2021, 22 when the S&P went down 15% while BTC went down 73%. Jeez, relax. Elon's such a smart guy. The the incest the incest of Elon's companies is gonna be an increasingly large problem. Tesla investing in X, SpaceX buying ridiculous number of uh, cyber Cybertrucks, and X receiving NVIDIA chip design for Tesla, Elon recruiting from Tesla for X, and and these are just the things we know about. Even if each of these actions were justified, the perception of them is bad. No way to sugarcoat it. The crazy part is actually this is a good thing. Imagine if you have somebody that is, operational and really good at what they do, but you see an opportunity for them somewhere else. As a CEO, you might just say, you know what, we might need you at this business. I don't care. This is an AI version. So Elon did say they might have a flying car. Mm-hmm. The Fed printed $30 billion in just 2 days. I'll see more than that. Nope, I'll never touch United Healthcare. That's cute. Nimbus, Duolingo, and AMD. I love AMD. I'm probably never gonna sell my AMD shares. PayPal, yeah, I have PayPal. I bought a small tracking share. Probably I'm gonna I'm probably gonna continue growing my PayPal number of PayPal shares that I have. Captured baby, first trick or treat in full immersive video. Um, Apple Pay will eat PayPal lunch. LOL. On tap to pay. PayPal gets new customers, no hardware investments, fully priced power, strong company versus Square versus Stripe, increased usage. Apple gets fee from card issuers. It is a little different. Yeah, I really do like PayPal. Wow. Dang, this company keeps getting hammered. They keep getting hammered. It's pretty sad. Um, let's look at the recent news around that AI robot. We kind of advertise like, oh, you know, it moves around by itself and everything else. Mm,
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44, a complete AI creation platform.
Okay,
so
we
loud.
have to have a conversation about this. I feel like it's been a minute since cool straight to camera rant video, but this has been all over my timeline lately, so I feel like I have to. So meet Neo, potentially the most futuristic product we've ever seen. This thing is a full-fledged humanoid robot, 5'6", 66 pounds, 4-hour battery life, self-charging, and it lives in your house. It's finally here. Get your mind out of the gutter. It's for doing chores. It's a housekeeper. It has the same dexterity as a human because it's shaped just like a human, walks around on 2 legs, has 10 fingers. It can fold laundry and put it away for you, or it can do the dishes for you from start to finish and then put everything away. It can go around and water the plants outside or inside on a perfect schedule, and it never forgets a single plant. And then it'll go around and vacuum and tidy up the house if anything gets left out. It always knows where everything is. It can find the TV remote, and it'll basically actively do all the chores that you know you have to do, but you don't actually want to do. And when it's done, it goes back to its little docking spot and charges itself. Imagine going out for the day of work and coming back a few hours later, and everything's done. All the chores are finished. Every single time, every day, you never have to do chores again. That's amazing. Or maybe let's say you have mobility issues. This thing can sort of act as a personal assistant in a lot of ways. These are things that represent massive value for a lot of people. And it's available to order now. This is available to order. This feels like it could be the best tech announcement of all time in 2025, except this isn't real. And I mean that in the most literal way possible. This is not real. First of all, it's a pre-order. So you can go to this website right now and you can pick between 3 colors, and then it's either $500 a month subscription for a standard delivery, or you can pay a flat $20,000 to own it outright and get priority delivery. Just drop a $200 fully refundable deposit to get in line today, and deliveries in the US start sometime next year. And that's just allegedly. We don't know when it's actually going to ship. Now, to be clear, it's not actually the price that I have a big problem with. Like, I know these numbers seem eye-popping on paper, but this is a first-generation bleeding-edge humanoid robot assistant. Like, I never thought that this would be cheap, and also there isn't really competition yet, so you got to imagine the target audience is going to be people whose time is worth more than the money they're spending on it. Like, this is for people who the idea of saving a few hours on chores every week so that they can use that time to make more money actually makes logical sense. Like, people really think like that. It's for early adopters. It's for people who want to spend however much they think it's worth on this brand new novel thing. That's fine. But my issue with this product is the gap between what it's actually capable of today and what they're promising as they take your money today. Like, I think when people watch a video like this, they expect that this robot has some sort of built-in artificial intelligence that allows it to recognize objects and navigate around on its own and learn your house and be productive for those hours while you're gone. And that, I think, would be a reasonable thing to get out of watching that video, because that's what it's designed to show. That's what you're supposed to feel. That's the dream. But that's not actually what's happening. So Joanna Stern, the legend, she did a video with this Neo robot also this week where the company showed her all the things that it could do. And turns out 100% of the things that they showed her were remotely controlled by a human in another room wearing a VR headset with controllers. That's not exaggerating. 100% of the stuff they showed her. The carrying things around, the loading up the dishwasher. I mean, look at this thing. Yeah, all of this is teleoperated. And this was a demo set up by this 1X company. So this is like best case scenario stuff. And I see a lot of people defending this robot online like, oh, there's probably other things that it can do autonomously. They just didn't show her yet. Really? You don't think they would show her the best stuff that this could do autonomously to keep selling the dream? If you watch that keynote video back, to their credit, you'll notice that they actually are very careful to label exactly when the robot is doing something autonomously and not teleoperated. And in that whole nearly 10-minute video, there's exactly 2 scenes that have this label. There's the get the door command.
Get the door, please.
Where the robot walks over to the door because someone's coming up. It grabs a handle, waits for the guest, and then sort of pulls the door open and fumbles backwards a little bit, kind of like a toddler, to let them inside. And then there's the put away the dishes command, where the robot toddles over to the person, recognizes the harmless, not glass, empty cup in its hand, grabs it, and then walks away with it. Cool. No, seriously, that's actually pretty impressive. Even if I could already today unlock the door with my Google Home and a smart lock with just my voice, there is something at least a little bit futuristic about a humanoid robot going to do that. That's part of the dream. It's doing it autonomously. But then that also means that everything else happening in this video and everything else we've ever seen this Neo robot do, we can safely assume is remote controlled. So the gap between what this product can actually do today and what it can maybe hopefully do someday in the ideal future it is massive. They are massively far apart. And so that's really my main issue. There seems to be a bit of a lost art in waiting for a tech product to be actually finished before announcing and unveiling it. Like, do you remember when tech companies would unveil a brand new tech product that they've been working on and then do a demo, and then the next slide was like, this thing is going on sale tomorrow or next week or something like that, and that hype would carry right into the buying cycle? You remember that? That was sick. But now, in this age of all of these AI products, it's like there's this thing where you end up selling the dream before you sell the actual product. And that is dangerous. Like, the promise of AI is so huge and so massive and magnificent and awesome, but is also so clearly not done yet that you end up with stuff like the Humane Pin, or even the Rabbit R1, for example, or heck, even Apple Intelligence, where you have these big promises, but the capabilities are still over here, while the promise is all the way over here. And I'm trying to figure out why they do that. And I think really there's 2 main reasons. And believe it or not, I think Tesla self-driving is a really perfect parallel example for a lot of this stuff. See, basically, in order for this robot to be everything people want it to be, they need to develop a super smart AI system that looks through the robot's sensors and is able to learn its environment and recognize everything it's looking at and teach itself to navigate that environment and perform tasks. It has to learn what a laundry room is and what the laundry looks like and how to fold each type of clothing, and it needs to learn what cups and forks and glasses are and how to pick them up, and it has to be adaptable to all these different sizes and shapes and materials and things of all these household objects, so that when the user asks for it to do something, just like, hey Neo, vacuum the living room when I'm gone, something like that, then Neo can go, okay, I know where the living room is, I know where the vacuum is, I know how to use the vacuum, where the handle's at, like how much battery life I have, how much I need to vacuum the whole living room, I know not to knock over lamps or certain objects in there. And even the laundry folding thing, like just that requires a ton of training data, or at least some way to understand all these different shapes of shirts and jackets and hoods and vests and all sorts of things, and hooks and hangers, and what gets folded, what gets dry cleaned, all these different things. And the list just goes on and on. And like, what if one of the tasks is going and getting the right medication for an elderly person and bringing it to them? It has to get that right. Like, it needs to identify the correct medication at the right time and the right intervals and bring it to them. Like, that is one of a ton of household objects that it has to specifically get really good at. Now, in the self-driving car world, no matter what you think of them, Tesla's definitely a leader here, and they've had a pretty clever approach to trying to work on this problem. Because their problem is their robots on wheels need to learn all these possible variations and ways to navigate situations that could happen on the road and how to get around them. Traffic cones, construction zones, weird lane markings, etc., etc. So, with their millions of cars already on the road, they have slowly, very slowly, let people turn on this beta self-driving feature in small stages in their cars, while instructing people to keep their hands on the wheel, of course, so that they can slowly start to gather information from people willing to beta test. And so those cars will encounter and navigate all sorts of situations for the first time, and then the second time, and then the 5th time, and then the 100th time. And all of this data can go back into the system to help all these cars learn and get better. And now at this point, this is like their primary advantage, is they have millions and millions of miles of training data from people essentially beta testing for Tesla. It's a robotics challenge. It's an AI challenge. But yeah, they're essentially using early adopters to beta test to make the systems better for the eventual masses. And now this home AI robot challenge is essentially the same thing, but in people's homes, which is potentially way more variables. Like, cars have to stick to what's on the road and mostly are operating in a 2D plane, where there's obviously different stories. People's houses are crazy different shapes, and there's all sorts of objects in different shapes and types of them, and a million different variables just with household objects. And maybe you could argue that the stakes of self-driving cars are a little higher because of all the safety risks, and if it messes up, someone could die. Maybe that doesn't happen as often with the home AI robot, but then again, if it gets someone's medication wrong, it's still pretty important. So I think the point here is you don't get to make this awesome, perfect home robot without all of this information. And so they need the training data, and so they go right back to early adopters. So people who press that order now button first and who actually, I guess, get one of these when they start to ship them will get a robot that can probably do a few simple things autonomously, like opening doors, but there will be many things it can't do. And for that, if you scroll down on their website, you can see there's expert mode, which is when you have something the robot can't yet do, and you schedule one of their teleoperating employees to look through the sensors into your home and do the task so that the robot can learn from it. And this is something that they've pretty directly said that they expect early adopters to be totally cool with. Like, go watch Joanna's video. I'll link it below the like button. She basically grills the CEO about all this stuff, and he's kind of just like, yeah, if you want to be on the bleeding edge of this, like, we'll probably blur faces and maybe let you geo-fence certain areas of your house, but yeah, that'll be one of the things that they allow you to do. So look, there are certain industries where pre-ordering something that's not finished yet is actually normal behavior. Like, this happens all the time with smartphones now. This happens in video games. Even
my thing is like, how's it gonna clean the upstairs?
Like, this happens all the time. It's resulted so many more times in this strategy. They feel like they have to announce the product way before it's done, and they end up putting out this thing that is just nowhere near the dream. And that's how you get, we talked about the humane pin. Doesn't that sound familiar? Like, getting announced with such a high potential ceiling and promising that this could maybe be a post-smartphone world type of gadget, but it was just absolutely not good when it came out, and not enough people were willing to beta test something with that miserable of an experience. And then the Rabbit R1, like I said, that's another one. And, they are surviving and they're improving, but absolutely with those early adopters. But a $20,000, 5'6" humanoid that wanders around your house and does chores, like, are there really that many people, you think, that are willing to spend that amount of money and know that they're going to have to potentially give up some pretty serious privacy and are basically going to be a beta tester for some unknown number of years to hopefully maybe someday achieve that dream? Some of those people are out there, but is there enough of those people? I don't know. I clearly don't know, and I think a lot of other people don't know. There are obviously a lot of potential downsides to this robot. It's too small and weak to carry anything super heavy. It's also too slow and a bit too clumsy, it looks like, to do anything really serious. And it requires inviting a ton of remote viewable cameras and microphones into your house. And it could also fall over and have a hard time getting up. And also, just like the self-driving car, there are a number of situations where the robot getting enough things wrong could be dangerous. Like, even like just the medication stuff that I talked about earlier, or even it just clumsily dropping something made of glass, or any other various potentially dangerous household situation. And also, I'm not even sure it has to be human-shaped, but that's another argument for another video. But the upside, clearly, is the dream. Like Rosie the robot from the Jetsons type of dream. A personal assistant that seamlessly goes around your house and quietly does all the stuff that you don't want to do, and does it better and faster as time goes on, and does it in quiet hours of the night. The point is, this is the new AI promise problem that we have. It's not just this product and this company. This is, the most visible one on all our timelines right now, but it's like all these AI products are promising the world way, way before they have a product that's ready to actually show anyone and take money for it. And theoretically, this is what we want AI to do, right? It's not just like AI-generated videos and slop and random copyright infringement. Like, we want it to be doing actually useful, productive stuff. That's not the issue. It's just the gap. The gap, that's the issue. And closing that gap is so hard. And this is one of the obvious examples. Like, the people that would benefit most from the ideal version of this robot, like the elderly or people with disabilities, are the least likely to become early adopters. So it's tough. I can actually applaud them for showing everything that they did to Joanna in that video. Fun fact, they actually reached out to me 10 months ago in January from a random Gmail address offering to do a sponsored video. I didn't respond. I didn't think it was anywhere close to real or worth doing a video or talking about, but we'll see how this ages. Like, we might look back at this in 12 months and everyone everywhere is shipping great AI products and humanoid robots, and it's all a dream, and I look like an idiot. In which case, great. We made it through that gap somehow. But history seems to be suggesting that I'll probably be right about this one, at least for now. But hey, subscribe to see me eat my words if I'm wrong. Thanks for watching. Catch you in the next one. Peace.
How about no? Literally, the fact it can have a camera that it can see everything that I'm doing and allows people access to it is definitely not something I'm interested in at all. Because how in the world is that gonna? In what world is that gonna be okay? Because like, why would I invite some person in India, allow him to see what's going on around my house? How is it gonna know the way most houses are built are so different, and how is it going to know how to move around? How's it going to go up the stairs? How's it going to go upstairs? And how's it going to go downstairs and clean up? Is there only going to be, will it, and then is there a subscription? I think there's also a subscription to this thing. It's like $500 a month for me to have a robot that I've fully bought already. I think the idea is there. I think one day we will be able to have a product like this, but probably in 10 years. Like right now, they're still trying to figure out how the hand works, let alone for it to do folding the laundry and getting medication, opening the cap on its own. So the way they advertise it is so misleading, because this is not an actual product that's out, and it's nowhere close to that. And the entire thing is just completely hype. So this lady here, she kind of breaks it down and just shows the problems with it. This Wall Street Journal.
Housekeeper. Thank you, Neo. For $20,000, you can pre-order 1X's Neo robot now, with delivery in 2026.
I think you missed a tiny spot over here.
Just one little catch. There may be a human behind the curtain, pulling the robot's strings.
If I throw up, will the robot throw up?
A company representative may need to peer into your house via Neo's camera eyes to get things done.
To many people, this is crazy.
You have to be okay with this for the product to be useful.
But is Neo a useful product?
We're twinning now, Neo.
Home robots have had two big challenges: creating a safe and capable body and a smart brain. 1X is taking on both of those, which is why Neo looks so different from a more industrial factory robot.
Neo, it's 70 degrees here in California. Why are you wearing a sweater?
Good question. Bernd, why am I wearing a sweater?
It's a combination of safety and just also generally aesthetics. You can think of it kind of like a skin, except if it was an actual skin, that would probably be pretty creepy.
It would be creepy, but I actually wasn't all that creeped out by Neo.
Inside Neo, it really starts with some very, very powerful motors that we have developed here at 1X. These motors are so strong and light that instead of using the classical gears that you see in robots, we can actually pull on tendons loosely inspired by biology and muscles. This allows Neo to move around not just quietly and smoothly, but also be very, very lightweight and be very low energy in motion, just like people.
That lightweight design is intended for our safety, in case the 66-pound robot falls. Although Neo is capable of lifting up to 150 pounds, it's not as superhuman as you'd think.
Crush it. It's a walnut.
There's this concept that we think that robots are like superhuman in like pressure and like strength. And some robots are, because they're heavily geared, but that means you're not sensitive, right? And delicate. Neo doesn't work like this at all. It works more like us. So the finger strength of Neo is about the same as a human.
That body lets Neo try to do a lot of things humans do. Emphasis on try.
Can I get a water?
If only the real world didn't have doors. All in, it took Neo a little over a minute to fetch a water from the fridge 10 feet away.
Thank you, Neo.
Next challenge, load 3 items in the dishwasher.
You got this, Neo. You got it.
And that took 5 minutes. The Neo I saw isn't the one shipping in 2026. The new model will be safer and have better hand dexterity. The one I saw still needed to take breaks to charge and cool down. The challenge isn't just Neo's body, it's also its brain. The body has to perform tasks safely, but the brain needs to know how to do them on its own, without human help. But right now, everything I saw Neo do was guided by a skilled pilot.
Teleoperation is essentially when there is a human in the loop.
And who is the voice I'm hearing right now of Neo?
I am a remote operator in a different room in the building.
And what's your name?
Turing.
What's your real name?
My real name is Turing.
Like that's your name on your birth certificate?
Yes, it is, believe it or not.
Alan Turing was, of course, the famous computer science and artificial intelligence pioneer. But this Turing, with a VR headset and controllers, was the one actually operating Neo. That is, until he handed me the controllers.
I actually might throw up. I think my hand is... I have no idea where I'm facing. This is me doing the Macarena.
Yeah, we're fine.
And Neo had to go to urgent care.
See you, Neo.
Why does Neo need to be operated like this in the first place? Because its brain, aka an AI neural network, needs to learn from more real-world experience. The videos of the robot doing things via teleoperation become the training data to make the AI model smarter. That's why 1X is putting Neo in the homes of early adopters.
I think it's quite important for me to just say that in 2026, if you buy this product, it is because you're okay with that social contract. If we don't have your data, we can't make the product better. I'm a big fan of what I call like big brother, big sister principle, right? Big sister helps you. Big brother is just there to kind of monitor you. And we are very much the big sister. Depending on how much you want to trade, we can be more useful. And you decide where on that scale you want to be.
Do you right now know what things NEO in 2026 will do autonomously versus what it will do teleoperated?
So when you get your NEO in 2026, it will do most of the things in your home autonomously. The quality of that work will vary and will improve drastically quite fast as we get data.
To be clear, on my visit, I didn't see NEO do anything autonomously. The company did share this video of NEO autonomously opening the door.
You know, there's this new trending concept now called AI slop, right?
I do know.
It's a very powerful concept of, let's call it robotics slop. It's the most useful kind of slop. Because if you put all of my glasses from my dishwasher in my cabinet, I'm pretty happy. It is going to be not perfect, but back to like just incredibly useful.
NEO might not fold my shirt perfectly, but if an arm is like kind of hanging out of the shirt, like it's okay. It's robotic slop.
To me, at least, like that's very okay.
Honestly, it isn't bad. Thank you. But the reality is, at least at first, much of NEO's work will be done by someone else. There will be an app where you can schedule teleoperation, specifying exactly what and when you want NEO to do things in your house.
So we want to, of course, make sure that we respect privacy as much as possible, and that it's always on your terms. You are always in control. Some examples of this is the teleoperator does not see you, right? We can blur people. Teleoperator also cannot go into specific parts of your home where you set no-go zones. So that's enforced on the software level. So even if the teleoperator tried, it cannot get the robot to go into those homes. And also the teleoperator can never connect to a robot unless you approve it.
Other companies, like Figure and Tesla, are also racing to build humanoid robots and develop their own AI models to make them fully autonomous. As someone who's always dreamed of the home robot straight out of the Jetsons,
Let's go home, Rosie. Yes, ma'am.
the dream finally feels within reach. But I also couldn't shake flashes of ex machina.
Do you have a name?
Ava.
NEO turns on the stove and throws some paper on and walks away. Can NEO do that? Will NEO do that?
NEO will not do that. Physically, can the robot do that? Yes. Physically, can a lot of products in your home do something dangerous if they decided to? Yes. We will ensure that that is not something that NEO is allowed to do. There are multiple layers of safety systems here that ensures that NEO cannot do something like this.
NEO decides to take a very heavy piece of wood, like the top of a table, and drop it on me when I'm sleeping.
NEO will not be able to, or allowed to, it's physically capable of, but it will not be allowed to pick up something that is that heavy. So it's like things that NEO cannot do is like pick up something that is very hot, pick up something that's very heavy, pick up something that's very sharp.
Nice job, NEO. High five. Nice. Oh, I'm over here. Spending the day with NEO was a bit like spending the day with a toddler learning how to do things in the world. Come on, you got more than... Oh, I'm gonna break the robot. The next few years isn't about owning a super useful robot. It's about raising one, letting it learn from your home, routines, and chores, all at the expense of the privacy of your inner sanctum. Even if you think this is all crazy, what NEO really signals is the beginning of physical AI in our lives and homes. A future where we may work alongside a new kind of machine.
What I really hope we can achieve is in 5 years, everyone has a very high quality of life. Everyone has a feeling of independence, irregardless of their age or any kind of disability. And I do hope we can give people more of their agency back and people can focus on what they actually want to do.
No, like this. 6, 7, 6, 7.
What if I told you this dish was...
Yeah, I think we definitely have a long ways to go because I don't know how many people are going to want to have a robot look into their house. Obviously, there's competition in China. Once again, in China, they are doing the same thing. They show all these robots that are running around and doing all these fantastic moves, but you can see there's a guy with his hand behind his back controlling exactly what the robot does. The running, the walking, and all that. But right now, a company like Kiva, the one we saw, all they're doing is NEO, 1X NEO. All they're trying to do is raise money, and with a $100 down payment, they're gonna have, I think it's $200 down payment. They're gonna be able to raise a whole bunch of money. With that $200 down payment, you get in line with everybody else to receive the robot, to be able to make the full payment for the robot, kind of in line when your time comes. But I don't think this is gonna be anything that's gonna be that people are actually gonna adopt. There's going to be early usage, but like she said, it's gonna be like a toddler. It's not gonna be able to do anything, and it's gonna be this person in China just walking around your house and looking at everything that you have. Um, it's gonna
Why?
could people use that for nefarious purposes? Would high let's say like would people like famous actors or famous people have something like that in their house? Most likely no. But maybe there's an application here where they can use this in warehouses, where you don't really have too many security items, but you just need to pay somebody in China to be able to, or India, to be able to move products around all day using their virtual glasses and these robots. Obviously, this robot can't really move anything. Obviously, it looks like the arm's not that big, but they can maybe make a stronger version where somebody can just put on VR glasses, move one product, sort products, and maybe this is something that can apply for Amazon or something like this. So kind of interesting in the long term, but we're obviously going into the world of robotics. This is the worst it's going to get, and things are going to get better and better from here. So um, I kind of see a positive robotics move from here. Amazon is obviously getting into these types of products, not so much into the humanoid robots. And I don't know why they're making robots look like humans with 5 fingers. For a for human perspective, we've just gotten used to using these 5 fingers. But do we actually need 5 fingers? If we had three, could we do everything that we've been doing this whole time? Maybe, maybe not play piano as well and the guitar. But besides that, like I think like why are they giving these robots 5 fingers? Is it useful for the kind of tasks these robots need to do? Could they function just as well with three? Um, but yeah, robotics is definitely seems to be the next thing that the world's looking forward to in the direction that we're going. Nvidia is actually really big with robotics. So robotics, but Amazon as a company, they are building robots that really just operate almost maybe 30% for now of their warehouse operations. And with time, they're going to be able to just expand on what they're doing, and that's going to give them a lot more operational efficiencies. So the Amazon robot humanoid arrival. So you got the Amazon is currently testing a humanoid robot called Digit, developing an agile robot used for the warehouse operations. So let's look at this one real quick.
With all the excitement surrounding large language models and generative AI, we were curious to see what could be achieved by integrating this technology into Digit's Siri characteristics. Digit was given information about this environment, but was not given any specific information about its tasks, just natural language commands of varying complexity to see if it could execute them.
Take the box that's the color of Darth Vader's lightsaber and move it to the tallest tower in the front row. Digit's taking my command and interpreting it based on the context of its large language model, which includes pop culture references such as Darth Vader. As you can see here, Digit has identified that Darth Vader's lightsaber is red and that a red box exists in its environment. It's also figured out which of the towers in the front row are the tallest and is able to get this internal language specification.
Yeah, so we have quite a ways to go from a robotics perspective. As you can see, that robot was moving so damn slow. It's not going to be able to move anything. So in 2023, Amazon had declared to have about 750,000 robots in its distribution and fulfillment center. And right now, this business here is costing them like billions of dollars right now, year over year. So if they can make that efficiency, I think Amazon is going to be one of the greatest companies out there. That's why I'm looking to invest in that company. Other warehouse robots similar to Amazon's is, as you can see, they have all these different types that pick up and move items. Type of Amazon robots: pods, sorting robots, hybrid, picking up, and forklifts. And then obviously Amazon has their partnership they have with Zoox, but they're gonna eventually get into their delivery robots that are gonna be able to pick up and deliver the products to people's homes. So here it is. This is the Sparrow picking up robot arm. Picks up the items and puts them in the right boxes. And then some robot probably comes and picks it up and puts it where it needs to go. I think the delivery is going to be the most important robot here, is because it costs a lot of money for somebody to drive the product to somebody's home and actually drop it off. So that is going to be Amazon's biggest win, and that's gonna take time. They're gonna have to invest a lot of money into that. When you're seeing a company like Google that has Google Waymo, that car drives completely by itself with nobody in it. You see Tesla having their own vehicle, Zoox autonomous driving, and this company is actually partly owned or fully owned by Amazon. So it says Zoox Inc. is an American technology company subsidiary of Amazon, developing driverless vehicle that provides mobility as a service. So all it does is this vehicle here delivers people, and with time they're going to use this technology and its awareness of its surrounding to deliver products. Which one do you think is less risky, delivering people or delivering products? I think it's going to be, obviously that's a rhetorical question, but with time, Amazon is going to get the fact that they already have a product out there pretty impressive. And they also have their Amazon, I believe, has Amazon they have their own EV cars, autonomous car. I think they have their own they have Zoox. That's their Amazon Auto expands to using so they used to use one brand of cars, and now they use even more. But yeah, that's what I think, like, as we're moving into this like world of robotics, company like Amazon is gonna definitely win. Me, Kevin reacted to this, and he was just saying how terrible this new AI robot is, and we got some time. Let's watch this video.
Step into video and handle every part of
this video. Looks like he's gonna cover some of the crazy robots that we see out there, doing backflips and whatever not. But I think it's nowhere close to where it needs to be. For example, like there's this robot you can box, but it doesn't move all by itself and needs human interaction.
Hello.
Hi.
I'm Sergi.
I'm Yolanda. Welcome to Unit 3.
So these are the dogs.
Yes.
I'm guessing this is the first one?
Yeah.
2013.
2013.
And then this is just like the evolution of your robot dog?
Yeah.
Okay, so you have 1, 2, 3, 4, 5, 6, 7, 8, 9 dogs so far. You upgrade the dog every year or two. All right, so this is kind of like the museum, but those are the ones that we're actually going to be working with today. This one has the LiDAR going on already. we're going to be spending the day experimenting, testing these guys, the humanoids, the robot dogs. We'll be putting the 3 flagship robots that Unitree are selling in 2025 to the test. There's the cute dog Go 2, the not so cute industrial dog B2W, and the straight up creepy but very impressive G1 humanoid robot. So, okay, good. Everything for Unitree started in 2013 when Wang Jingjing developed quadrupeds during his postgraduate studies at Shanghai University. His first quadruped device, X-Dog, was developed in 2013 for his master's thesis. His X-Dog went viral in tech media and someone actually wanted to buy his robot. Wang launched Unitree Robotics in August 2016. So this one is mainly for transporting things on top of it?
Yeah.
Can I get on it?
Yeah, sure.
Oh my God, I'm surfing a robot dog. The robot dog I'm surfing is the B2, the fastest running industrial grade quadruped. It can have various applications like inspections, search, and entertainment. Wow, and it can do like much more. I mean, I could probably carry like one of those guys. Can I drop him? This is so cool. My dog, if I picked him up like this, he would do the same kind of movement. The robot dog I'm throwing around is the Go 2. It's learned some pretty advanced movements such as upside down walking, adaptive rollover, and climbing over obstacles, all for $1,600.
He can imitate you. You jump, our Go 2 will jump.
Oh, okay. Run. Hope he doesn't leap at me. Hey. Wow. A very emotional moment. These things are terrifying. Look at that. That's really close. Oh my God. I just feel like he's gonna like attack me, you know? The B2's wheeled counterpart, the B2W, is capable of navigating complex environments efficiently, and it's able to stabilize walking on very uneven surfaces, like grass, stone, and gravel paths. Now, as we go from 4 legs to 2, the first generation humanoid robot at Unitree was the H1. Designed for robotic applications, the H1 has great mobility, making it suitable for climbing stairs and a lot more. So this is the first generation.
Yeah.
H1. Yeah. He looks like he's about to uppercut you. Yes! This is cool. I don't know if we can include this, but did you see he has like actual butt cheeks, like little metallic ones? And this is the G1 humanoid robot, the latest generation of humanoids. It can walk at speeds of over 4.4 miles an hour, climb stairs, maintain dynamic balance, and is even trained in martial arts. One of the most mind-blowing things about the G1 is its price of $16,000. Is he gonna like lunge? Okay. Pop. Yeah, it's good. I did karate when I was a kid. You know, maybe I can give him a little roundhouse kick. 3, 2, 1. One of the most impressive things the G1 humanoid robot does is keeping its balance like a human would. Watch this. I don't want to push him, but I have to demonstrate what he can do. You know, I feel kind of like mean. Wow, okay. Yeah, he's got good balance. No matter how hard I tried, I couldn't push it off balance. Wow, that was good. He stayed up. That was crazy. He's pretty smooth. Whoa. Hey, someone's coming in to give me a beating. Whoa, okay. Whoa. He's coming, I didn't even get any gloves. Oh, wait, this was not, am I actually supposed to fight this guy? Ah, he's got good movements. After surviving the boxing G1 scare tactics, I'm mind blown by these crazy robots. They move with precision, think on their feet, and look like something straight out of a sci-fi movie. But we've only just scratched the surface. Right, so that was a bit of a teaser to show what these guys can do, but they can do a lot more.
Imagine being able to build anything just by thinking about it.
Now, before we continue with today's video, if you're as obsessed with cars as we are, make sure to check out SBXcars.com. It's our very own premium car auction platform where you can find rare and collectible cars all around the world. SBX Cars is the place where exclusive vehicles are bought and sold across the planet. So whether it's hypercars or classic cars, we've got it all. And the best part is, we have such a wide network that we're able to connect car enthusiasts everywhere in one specific location. Now, with our the Unitree Combat Competition, which sees 2 G1 robots battling it out on the ring. It's the first ever humanoid fighting competition, and we imagine it will not be the last. And now, it's time for me to prove my human worth against one of these metallic fighters. I'm getting ready for a human versus humanoid boxing fight. Wish me luck. Oh, there he is. So this is who I'm fighting. He's ready. I'm gonna go get my boxing gloves on, ease my way out of getting, okay. It's like, it's a little bit scary. I'm getting chased down by a robot with gloves on. Honestly, I don't know what I've gotten myself.
So by the way, these robots are controlled by somebody. They're not just independent on their own. So they're not autonomously fighting. It's pretty impressive, but still, they're not doing any of this by themselves. But still, pretty impressive still. Less than 30. They actually have a robot fighting competition right now that's going on, and yeah, I'm not gonna go through the whole thing, but it's pretty impressive. Like the more and more I've seen a lot of those types of videos, it just seems like we're just in that kind of direction. In a world of robotics, I am done this entire video session, live session. I'm going to bring that back. The entire session was all going to be about earnings, covered the earnings for the companies that have reported. The economy looks pretty healthy still. We are not going anywhere at all. And so I think we're going to see a turnaround. We're seeing the federal government quietly do stuff that is in support of the economy. Next month, how do earnings look? On Monday, we have Fubo. I think Fubo is a pretty good company, still kind of small. They're more of video streaming. I'm sure you've seen them, heard them. They're going to be reporting earnings. The past couple of quarters, when they reported last quarter, they beat top and bottom pretty good. The quarter before that, Q1, they missed on revenue, but I think revenue is going to pick up for this company because specifically there's sports are happening right now. They're going to make money on ads, subscriptions. The World Cup is coming up, so in the long term, they're going to be getting a lot more revenue. Palantir, some real estate company here, pays really good dividend. HIMS, healthcare industry company. Palantir is more of a technology embedded company. Very, very expensive right now. The fact that it's $200, it's kind of insane. If you look at the stock price, this company has gone up over 2,000% since 2021. In the past year, 300, 1 year, 160, couple months, 6 months, about 84, and about 15% in the last month. So this company is definitely exploding. HIMS, I mean, they're known for ED, ED products, but in reality, they are doing a lot more. They're a very innovative company. Q2, they missed on revenue and they missed on EPS. I don't know what they're gonna do this quarter. I think they definitely got beat up on the whole Trump calls it the fat drug. They got really beat up on taking on the whole GLP-1 compounded GLP-1 products. So maybe they might not do as well on revenue. They're starting to do their in-house blood testing. Is very much of a real estate play, really good dividend. Last quarter they missed on EPS. I think real estate is starting to pick up, so most likely they're gonna report positive numbers. So we may see the stock actually run to that, the fact that is going down before earnings is actually pretty good sign. We're seeing rates go down as well. Navitas, this company, I've been looking at them. They are quite small. I believe they beat last quarter. I have a feeling they're going to beat even massively going into this quarter, just because I think they have a really cool business strategy where they test these chips for companies before, so companies can start using those products. Uber, again, I think this company is a pretty good play going into the World Cup. There's going to be a lot more transportation that people are going to need. Also, they have partnered up with Waymo to not only deliver people, but now also deliver food as well. And they're expanding. And then Google is going to be expanding their Waymo service. So that's the autonomous driving robotics. As well. So Shopify, what Shopify does, of course they beat on earnings. I don't see Shopify slowing down as well. I think they're going to report positive earnings. Spotify, I don't know how well they're going to do. It looks like they missed on EPS. They're still probably one of the top audio companies out there. So Spotify, we'll see. It looks like overall they kind of missed. They beat last quarter. Historically, the last couple of quarters they've been missing significantly versus what the analyst expectations were. So I don't know where they're gonna go. I really don't care. Pfizer, Pfizer, it looks like historically they beat earnings, but they, especially this year, since Trump kind of took office, the drug companies are getting beat up a little bit. So I don't know where they're going to go, but drug prices are coming down. There's a product called Trump RX. Practically, you can, it just means that you can go on to a government site and literally buy cheap drugs. ADM, any other companies that I'm interested in. Hertz is going to be interesting to see how Hertz performs. I think they do both rentals and people can buy cars and off of the site. I don't know how well that's going to go for them. They beat last quarter. Then I think other quarters they definitely have missed historically. So I don't know how well they're going to report these last quarters, especially the way the credit market's going. The big dog here that I'm really looking forward to is AMD. I'm excited to see how AMD reports overall. I mean, since Q4 of 2022, they've always beat on EPS, and they've also beat on revenues as well. So most likely, they most likely are going to beat again. And I think from what we've seen, some of these tech companies are really doing well on margins. So most likely AMD is going to beat earnings. Definitely looking forward to this. The company has grown significantly after a period of really not seeing much growth. Here they had a huge pop here, like almost 20, 30, about 30%, and they continued to grow. This company over the last week down about 74 cents, 77.74%. Over the past month, they're up 55%. The market is starting to value this company even more. So I do think that AMD is a great business. From what the analysts are saying, AMD is definitely a buy. Let me just put this right there. Let's look at the analyst forecast. So there are about 32 analysts saying this company is overvalued by about 14%. They're seeing that in the next 12 months, they're saying that the stock price is either going to be 310 or low 120. I don't think it's going to be going to lower 120. Nobody's saying sell the company anymore. All analysts are saying what? Strong buy, or hold. And as you can see, the hold has dropped off. the buy and strong buy has increased. So AMD is a company that I'm looking forward to see their earnings. I'm going to try my best. That's going to be after market close. So I'm going to try my best to do this one on live 4:15. I may just pop on so just to see their revenues. This company beats revenues significantly most of the time, so the market might actually even buy the market might actually value them even higher once they start once the we get closer to earnings. SMCI, again, this company recently had a decent run. Yeah, so 3% on one day, week about 4%. 1 month they're sitting about 70% over year to date. On earnings perspective, I believe they missed a couple of quarters. Yeah, they missed on Q2 just because they were messing up. There were a lot of finance based lies the company was saying. So valuations for the company went down and their expectations went down here, but maybe there's a chance they may beat that. But they are an important market for the AI and data center industry cooling systems. So SMCI companies are, let's see what analysts are saying. There are 15 analysts covering this company. They're saying it's overpriced by about 9%. Next 12 months is either going to be 70, 47, or $30. There's more sells stepping up here, saying the company should be sold, but majority are saying that it's a hold, and some saying about 4 saying it's a strong buy, 2 saying it's just a buy. Zeta is gonna be interesting. They recently partnered up as well. McDonald's, Lemonade, Unity, DocuSign, Digital Ocean Holdings, Pfizer. We're gonna be able to see how things are going here as AI is becoming more of a standard. I think here we're gonna see people probably leave the platform just because companies are going to start using AI to get a lot of the answers. Robinhood is also reporting on the 5th. So my biggest one is Tuesday. This is the company I like a lot, AMD, and that I'm looking forward to. So that is it for the day. Thank you so much for joining me. Have a great rest of your weekend. Peace.